ExamPrep.School. Arizona Surplus Lines Insurance Broker Exam. There are 5 practice exams in the series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Insurance regulation, markets, records. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Arizona Revised Statutes Section 20-297, after a surplus lines broker commences using an assumed name in its insurance transactions, within how many days must the broker file a certificate of assumed business name with the Director of Insurance? A. 10 calendar days after first use. B. 30 calendar days after first use. C. 60 calendar days after first use. D. Prior to first use of the assumed name. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The statute specifies that a surplus lines broker must file the assumed business name certificate within 30 calendar days after it begins using the assumed name. Reason A is not correct. This time frame is shorter than the statutory period requiring brokers to file within the specified days. Reason C is not correct. This time frame exceeds the maximum period allowed by statute for filing an assumed name certificate. Reason D is not correct. Statute requires filing after commencement rather than filing prior to using an assumed name. Question 2. According to Arizona Revised Statutes Section 20-411.02, which of the following activities performed by an individual mandates holding a surplus lines broker license? A. Negotiating coverage with admitted insurers in the state. B. Placing insurance with unauthorized insurers for a resident insured. C. Providing risk management advice to prospective clients. D. Preparing and filing surplus lines tax returns with the state. The correct answer is B. Under Section 20-411(2), an individual must hold a surplus lines broker license to place insurance with unauthorized insurers for resident insureds. Activities involving admitted insurers, advisory services, or tax filing do not require that license. Reason A is not correct. License requirements do not extend to negotiations with admitted insurers under this statute. Reason C is not correct. Providing advisory services alone does not trigger a surplus lines broker license requirement. Reason D is not correct. Preparing tax returns is an administrative function not covered by the broker licensing statute. Question 3. Devin recently applied for an Arizona surplus lines broker license. Devin is 28 years old, holds an active Arizona property and casualty producer license, passed the surplus lines broker examination, maintains a principal place of business in Phoenix, and paid all required fees. Devin has yet to provide evidence of financial responsibility. Under ARS 20-411, what must Devin submit to satisfy this requirement? A. Evidence of errors and omissions insurance covering surplus lines transactions. B. An audited financial statement demonstrating a net worth of at least $100,000. C. A surety bond in the prescribed amount as required by statute. D. A trust fund agreement addressing premium collection and remittance. The correct answer is C. The correct answer is a surety bond in the prescribed amount because IERS 20-411 mandates that surplus lines broker applicants demonstrate financial responsibility by filing a bond or equivalent security. Reason A is not correct. Errors and omissions insurance, while prudent, is not the statutorily prescribed means of demonstrating financial responsibility under ARS 20-411. Reason B is not correct. There is no net worth requirement specified for surplus lines broker applicants in ARS 20-411. Reason D is not correct. Trust fund agreements govern premium handling but do not satisfy the bond requirement for financial responsibility under ARS 20-411. Question 4. Under ARS Title 20, which of the following conditions must be met for an Arizona surplus lines broker to bind coverage on behalf of an unauthorized insurer? A. The broker has notified the director within 30 days after binding. B. The insured has paid the full premium before binding. C. The insurer has furnished a written binder agreement authorizing the broker. D. The policy is subsequently filed with the stamping office before binding. The correct answer is C. Under Arizona law, binding authority for surplus lines brokers arises only when the unauthorized insurer furnishes a written binder agreement that explicitly delegates binding power to the broker. Other actions, such as premium payment or stamping office filing, are required after binding. Reason A is not correct. Director notification is a post-binding filing requirement rather than a condition to bind coverage. Reason B is not correct. Insured payment is required after binding, not a prerequisite for binding authority. Reason D is not correct. Stamping office filing occurs after binding and does not establish binding authority. Question 5. Under ARS Title 20, which of the following underwriting actions is explicitly prohibited for a surplus lines broker acting in Arizona? A. Verifying applicants' insurability documentation. B. Collecting risk information for underwriting analysis. C. Negotiating coverage terms with the insured. D. Establishing an insurer's premium rates. The correct answer is D. Arizona law prohibits surplus lines brokers from setting or altering an unauthorized insurer's premium rates. Rate making is exclusively reserved for insurers and regulators. Collecting risk data, negotiating terms under delegated authority, and verifying insurability are permissible underwriting support activities. Reason A is not correct. Reviewing applicant documentation is an acceptable service separate from determining rates. Reason B is not correct. Gathering risk information is a permitted underwriting support function and does not involve rate making. Reason C is not correct. Negotiating terms under a delegated authority is allowed. Rate setting remains prohibited. Question 6. Under ARS Section 20-443, which of the following most accurately defines misrepresentation in the sale of surplus lines insurance? A. Any material misstatement or omission made knowingly, with intent to induce an insurer to assume a risk, or with reckless disregard for its truth. B. An unintended inaccurate description of policy provisions made without intent to deceive. C. Failure to disclose immaterial facts or clerical errors during the application process. D. Exaggerated statements of coverage benefits to attract an insurer, absent omission of material information. The correct answer is A. The correct answer captures the statutory definition of misrepresentation as a material false statement or omission, made knowingly or recklessly to induce an insurer to assume risk under surplus lines insurance. Reason B is not correct. Inaccurate descriptions without intent or materiality do not meet the statutory requirement for misrepresentation. Reason C is not correct. Immaterial facts or clerical mistakes are explicitly excluded from the definition of misrepresentation. Reason D is not correct. Overstatements without omitting material information do not satisfy the statute's criteria. Question 7. A surplus lines broker drafts an email advertisement for prospective clients outlining features of surplus lines insurance. Which of the following statements in the advertisement would violate ARS 20-443? By making a prohibited false statement about policy terms? A. Premium payment plans for surplus lines. Policies can be structured to accommodate insured cash flow. B. Surplus lines coverage may include different exclusions than admitted lines depending on insurer underwriting criteria. C. Because surplus lines insurers are non-admitted, they are not guaranteed by state guarantee associations. D. Surplus lines policies are eligible for recovery under the Arizona Insurance Guarantee Fund if an insurer becomes insolvent. The correct answer is D. This option is correct because under ARS 20-443-1, surplus lines policies are not covered by the State Guarantee Fund, making the claim illegal in advertising. Reason A is not correct. This accurately describes an allowable premium financing arrangement and does not misstate policy terms. Reason B is not correct. This description accurately reflects that surplus lines policies can have unique exclusions set by non-admitted insurers, so it is not false. Reason C is not correct. This statement correctly notes the non-admitted status of surplus lines insurers and their exclusion from guarantee associations. Question 8. Under ARS 20-409, which of the following is not a condition for recognizing an insurer as an eligible surplus lines insurer in Arizona? A. Maintaining policyholders' surplus of at least $15 million. B. Being licensed to write insurance in at least 3 other states. C. Holding a financial strength rating of at least B+ from AM Best. D. Providing a security deposit to the Surplus Lines Trust Fund in Arizona. The correct answer is B. The correct answer is not required by statute, whereas the other listed conditions are mandated by ARS 20-409 for recognition of a surplus lines insurer. Reason A is not correct. Policyholders' surplus of at least $15 million is explicitly required by statute. Reason C is not correct. A financial strength rating of B+ or higher from a recognized agency is mandated under the definition. Reason D is not correct. Depositing a security with the Arizona Surplus Lines Trust Fund is a statutory requirement. Question 9. Under AERS 20-414, which of the following items is required to document the diligent effort to procure coverage from admitted insurers before placing a risk with a surplus lines broker? A. Copies of declinations from at least 3 authorized insurers, including dates and reasons for refusal. B. A letter from the insured outlining their decision to seek non-admitted coverage. C. An internal memo summarizing market conditions without insurer responses. D. A signed agent statement confirming the risk was presented to an authorized insurer. The correct answer is A. The statute requires documented declinations from multiple admitted insurers, with dates and stated reasons, to demonstrate diligent effort before placing coverage on the surplus lines market. Reason B is not correct. A letter from the insured does not satisfy the requirement for insurer declination documentation. Reason C is not correct. An internal memo without specific insurer responses fails to prove diligent effort. Reason D is not correct. A generic agent statement does not replace documented declinations with dates and reasons. Question 10. Which of the following best defines a non-admitted insurer in the United States surplus lines market? A. An insurer licensed in the insured state that writes coverage through surplus lines brokers. B. An insurer not licensed in the insured state, but eligible to provide surplus lines coverage after diligent effort. C. A captive insurer that writes surplus lines. Policies exclusively for its parent organization. D. An alien insurer licensed in all states to underwrite high-risk lines directly. The correct answer is B. This option correctly captures that a non-admitted insurer is not licensed in the insured state and writes surplus lines coverage only after a diligent effort to find admitted market capacity. Reason A is not correct. License status in the insured state makes an insurer admitted rather than non-admitted. Reason C is not correct. A captive insurer serves its parent and does not represent a general surplus lines underwriting entity. Reason D is not correct. Licensing in all states indicates admitted status, not non-admitted surplus lines participation. Question 11. From a regulatory standpoint, which of the following distinguishes non-admitted insurers from admitted insurers? A. Participation in state guarantee funds without surplus lines filings. B. Exemption from state filing requirements for policy forms and rates. C. Obligation to file financial statements with the state weekly. D. Exemption from annual premium tax payments. The correct answer is B. This option accurately identifies that non-admitted insurers are not required to file their policy forms and rate filings with the state, unlike admitted insurers. Reason A is not correct. Non-admitted insurers do not participate in state guarantee funds and must adhere to surplus lines regulations. Reason C is not correct. Regular financial statement filings are not mandatory on a weekly basis for non-admitted insurers. Reason D is not correct. Both admitted and non-admitted insurers are typically subject to premium tax requirements. Question 12. Why might an Arizona insurance producer place coverage in the non-admitted market? A. To secure standard risk coverage at lower rates than in the admitted market. B. To obtain specialized or high-limit coverage unavailable from admitted insurers. C. Because non-admitted policies are exempt from all federal regulations. D. Since surplus lines coverage allows the insured to cancel unilaterally at any time. The correct answer is B. This option correctly explains that producers use the non-admitted market when coverage or limits required are not offered by admitted insurers. Reason A is not correct. Rates in the non-admitted market are often higher due to the unusual or high-risk nature of the exposures. Reason C is not correct. Non-admitted policies are still subject to state oversight and surplus lines laws, not exempt from federal rules. Reason D is not correct. Cancellation rights do not typically grant unilateral insured cancellation at any time under surplus lines rules. Question 13. Under Arizona law, a non-admitted insurer must satisfy which solvency requirement to write surplus lines business? A. Post a trust deposit in Arizona instead of meeting minimum surplus thresholds. B. Submit audited financial statements only when surplus drops below $5 million. C. Be licensed as an admitted insurer in 3 or more states with combined surplus over $20 million. D. Maintain a policyholder surplus of at least $15 million and hold an AM Best rating of B++ or better. The correct answer is D. This option correctly identifies that Arizona requires non-admitted insurers to maintain a minimum policyholder surplus and a specified financial strength rating to ensure solvency. Reason A is not correct. A trust deposit cannot substitute for the statutory surplus and rating criteria. Reason B is not correct. Quarterly financial submissions are not contingent solely on surplus falling below a threshold. Reason C is not correct. Admitted licensing in other states does not replace Arizona's surplus and rating requirements. Question 14. A surplus lines broker in Arizona identifies a non-admitted insurer rated A++ interested in providing a manuscripted liability policy. Under state surplus lines laws controlling access to non-admitted insurers, which action must the broker perform before binding the coverage? A. Confirm that all admitted market insurers have been solicited and declined coverage. B. Submit the policy to the state stamping office for approval before binding. C. Obtain a certificate of authority from the state insurance commissioner for the non-admitted insurer. D. Verify that the non-admitted insurer is listed as an eligible, unauthorized insurer by the State Department. The correct answer is D. The broker must ensure the non-admitted insurer is officially recognized as eligible by the state before placement. which is the primary mechanism that state laws use to control access to non-admitted insurers. Reason A is not correct. Verifying admitted market declinations relates to coverage availability, not to controlling which non-admitted insurers may be used. Reason B is not correct. Submitting to the stamping office occurs after placement and does not establish insurer eligibility. Reason C is not correct. Non-admitted insurers cannot obtain a certificate of authority like admitted insurers. Eligibility is determined by a state listing. Question 15. A surplus lines broker in Arizona seeks admitted market quotes for a commercial property that requires both fire and flood coverage. One insurer declines coverage in writing, and another issues a policy excluding flood hazard. Under criteria for coverage unavailability in the admitted market, is placement with a surplus lines insurer permissible? A. Yes, because flood coverage is not available in any admitted market. B. No, because one insurer offered fire coverage even though flood was excluded. C. No, because one insurer submitted a policy form. D. Yes, because neither insurer provided the required flood coverage. The correct answer is D. Placement is permitted when no admitted insurer provides the full coverage requested. An exclusion of a required peril means coverage is unavailable even if fire-only coverage was offered. Reason A is not correct. Flood coverage can be available in the admitted market. The key is whether the insurers offered the specific coverage requested. Reason B is not correct. Offering fire-only coverage does not satisfy the client's flood requirement, so that alone would not bar surplus placement justification. Reason C is not correct. Submission of a policy form does not establish that the coverage meets the insured's needs. Question 16. A surplus lines broker needs to place a manuscripted environmental liability policy for a client because no admitted insurer offers the required form. Under Arizona rules for unique or manuscripted property risks, which step must the broker take before binding the non-admitted placement? A. Submit the manuscripted form to the state insurance department for prior approval. B. Secure the insured's signed acknowledgement of non-admitted coverage and lack of guarantee fund protection. C. Obtain a rate filing exemption from the Admitted Market Rating Bureau. D. File a policy filing with the stamping office before issuing the binder. The correct answer is B. Arizona requires that the insured acknowledge in writing the non-admitted status and absence of guarantee fund coverage before a surplus lines placement for a unique manuscripted risk can be bound. Reason A is not correct. Admitted market form approval is not required for non-admitted manuscripted policies. Reason C is not correct. Rate filing exemptions relate to admitted insurers, not to surplus lines placements. Reason D is not correct. Stamping office submission occurs after binding and is not a pre-binding requirement. Question 17. In the surplus lines marketplace, an alien non-admitted insurer is best defined as an insurer that A. Is domiciled outside the United States and not licensed in the state where the risk is located. B. Is licensed in one U.S. state but not licensed in another state where the risk is located. C. Is chartered under federal U.S. law but not admitted at the state level. D. Maintains a U.S. branch yet holds only a foreign license. The correct answer is A. The correct definition is an insurer domiciled outside the U.S. that lacks admission in the state where coverage is placed, qualifying it as an alien non-admitted insurer. Reason B is not correct. This describes a U.S. domestic non-admitted insurer, not an alien insurer. Reason C is not correct. There is no federal charter for insurers that override state licensing requirements. Reason D is not correct. Maintaining a U.S. branch does not change the insurer's alien status if not state admitted. Question 18. Under U.S. surplus lines regulations, which condition must an alien insurer satisfy to be eligible for placement by a licensed surplus lines broker? A. Be listed on an approved state or NAIC quarterly eligible list and maintain a U.S. trust fund or letter of credit. B. Hold a U.S. federal certificate of authority and a standalone U.S. branch office. C. Maintain a minimum paid-in capital of $100 million in its domiciliary jurisdiction. D. Obtain a non-resident license in at least 5 U.S. states. The correct answer is A. An alien insurer must appear on an approved list for surplus lines placement and back its U.S. exposure with a trust account or letter of credit domiciled in the United States. Reason B is not correct. No federal certificate exists for state surplus lines. Branch offices alone don't satisfy eligibility. Reason C is not correct. Capital requirements are set by domicile, but trust fund or credit backing is mandated by U.S. surplus lines law. Reason D is not correct. Non-resident licensing in multiple states is not a substitute for listing and financial backing requirements. Question 19. In providing global surplus lines capacity, the London insurance market is primarily known for A. Offering specialized capacity through multiple syndicates, underwriting on a subscription basis. B. Acting as the U.S. federal backstop reinsurer for admitted carriers. C. Functioning exclusively as a mutual indemnity pool for European insurers. D. Issuing regulatory opinions on surplus lines compliance to U.S. states. The correct answer is A. The London market's hallmark is its subscription underwriting model, where syndicates share portions of risk to provide specialist surplus lines capacity. Reason B is not correct. The London market does not serve as a federal reinsurer for U.S. admitted carriers. Reason C is not correct. It is not a mutual pool. Syndicates are investor-backed groups, not a mutual structure. Reason D is not correct. London markets have no regulatory authority over U.S. surplus lines compliance. Question 20. Which statement accurately characterizes the structure of Lloyd's of London as it relates to the insurance marketplace? A. It operates as a marketplace of underwriting syndicates backed by members rather than as a single insurance company. B. It is a mutual company owned collectively by its policyholders. C. It functions as a government-run clearinghouse for reinsurance agreements. D. It is an international corporate entity licensed to underwrite globally under one balance sheet. The correct answer is A. Lloyd's is a marketplace where independent syndicates underwrite risks, supported by capital of various members, rather than being a single insurer. Reason B is not correct. Lloyd's is not a mutual insurer. It serves as a market structure for syndicates. Reason C is not correct. It is not government-run and does far more than reinsurance clearing. Reason D is not correct. Underwriting is done by separate syndicates, not under one corporate balance sheet. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.